What's going on, everyone, and welcome back to the channel. Today we're diving deep into the world of European finance, specifically what the European Central Bank, or ECB, might do next. A recent report from Bank of America has everyone talking, and it suggests the ECB is in a really tight spot. So, here's the situation. The ECB's Governing Council is set to meet in December, and the big question is, will they raise interest rates again? According to BofA, the answer is probably no. They're likely to keep rates on hold. But why? It all comes down to credibility. For a long time, the ECB has been forecasting that inflation would come down. They've been using these forecasts to justify their policy decisions. The problem is, inflation has been stubbornly high, much higher than they predicted. This has created a credibility gap. Think about it. If the official forecasts keep being wrong, how can the market trust what the central bank says it's going to do? Bank of America's analysis points out that the ECB's own inflation projections have been a major source of policy mistakes. They've consistently underestimated how persistent inflation would be. Now, they're facing a dilemma. If they raise rates again, it shows they're serious about fighting inflation. But if they've been wrong about their forecasts for so long, it makes it hard to justify another hike based on those same models. The market is also playing a huge role here. Right now, investors are betting that the ECB will be forced to cut rates sooner rather than later, maybe as early as next year. This is partly because the economy in the eurozone is looking a bit sluggish. If the economy weakens, the ECB might have to pivot from fighting inflation to stimulating growth. This creates a communication nightmare for the ECB. They need to convince everyone that they're committed to their 2% inflation target, but their track record and the weakening economic data are telling a different story. Bank of America calls this a credibility deficit. The ECB needs to rebuild trust, and holding rates steady in December might be their way of hitting the pause button to reassess the situation without making things worse. So, what does this mean for you? Well, if you have investments, loans, or a mortgage in Europe, the ECB's decisions directly impact you. A pause in rate hikes could mean borrowing costs stabilize for a bit, but the bigger picture is one of uncertainty. The battle between high inflation and a slowing economy is far from over. We'll be watching the December meeting very closely to see what President Christine Lagarde and the ECB decide. It's a high-stakes game, and their next move will be crucial for the European economy. That's all for today's update. What do you think the ECB will do? Let me know your thoughts in the comments below. Don't forget to like this video and subscribe for more financial insights. Thanks for watching, and I'll see you in the next one.